This is the briefing for Friday, March 8th. This is one tough market, and I'm wondering, I don't have any indication from the market as of yet, but I'm beginning to get some thoughts in my head as to whether this market may be forming some type of a top because it is struggling to move higher. Now, normally I have these charts on a 15-minute chart basis because that's what I use during the trading day to basically manage my short-term trades. But I've changed them to 30-minute chart in order to get a little bit more information on the charts themselves. This is the spiders on 30 minutes, and this is the Qs. Now, this was a pretty interesting sell-off that we saw this week, earlier in the week, and especially because it approached the time frame where it appeared that it was going to break through a series of higher highs and higher lows. And let me just diverge for a second. You can see this is a daily chart of the spiders, and you can see this is an uptrend. It's a series of run, pause, run, pause, run, pause, run, pause, and none of these higher lows have been broken. But right here, it appeared, I think this was Tuesday, it appeared that potentially on Wednesday that the market was going to break through this 504 area, and that would then have broken the previous higher low, which was this one right here, and then suggested that it was transitioning into a greater degree time and price counter trend rotation. Keep in mind, if you look at this as a run, pause, run, pause, run, pause, run, pause, that markets run and pause in all degrees of time. On a weekly chart or a longer term chart, you could look at this as a run and then some type of greater degree time and price pause that could have occurred if this were broken. It didn't occur. The next day, we traded right back up to resistance at the 510 area, and then, of course, traded above that. And then today, we've got another reversal. So you can see here, this was the move that tested that 504, 505 area. Then we bounced off of it, gapped up in yesterday's trading, and then today opened up, and it appeared, based on the employment numbers, that the market was going to continue skyrocketing and just moving higher. But then after the first hour and a half of trading, we got some pretty significant selling that came in, and selling continued for the rest of the day. Now, we closed near the low of the day. That suggests that the market probably would have continued selling off if it hadn't closed. But we'll just have to see what happens. The probabilities are such that we should see lower prices on Monday. But then again, with this market, I think anything is possible. Pretty much, this is a pretty volatile situation that we've seen here. And then looking back at the daily chart, going back to the daily chart, I should say, you can see the up and down, the volatility that's occurred with a slightly upward trend to it in the spiders. Now, volume had been declining as we had been going higher, and you can see that right there. But then it ticked up today as we got this reversal day coming back down to test this 510 area. So what happens on Monday, once again, at this 510 area is going to be important, because if it breaks through 510, then that opens up a test of this 504 area. And breaking that would break the series of higher highs and higher lows, which would then suggest that it is transitioning into some type of a greater degree time and price counter trend rotation. And the only way to gauge how deep that is going to be is to watch these support levels, because as they're broken, and as they're broken with stronger internals supporting a downtrend, would then suggest that it's going to be deeper than we would expect. So we're going to have to watch these support levels if and when this 510 area is broken, and then the 504 area as well. Breadth was fairly muted. It was the high today was right about 1,500 shares. It doesn't reflect on a 15-minute or on a daily basis, but it was about 1,500 shares positive, which was fairly decent, and it appeared that we were going to continue to see higher prices and that it would hold above yesterday's high, but that didn't occur. We finished the day with only 258 shares positive in market breadth. 52-week highs minus 52-week lows were basically flat from yesterday at 564. In the Qs, we had basically a little bit different. You can see we traded above these highs here and then traded back down through this 440 area and closed below 440. So in comparing this to what we just looked at in the spiders, the Qs have closed below its initial support level. Next level of support comes in at 534, and that would be significant because that would break this series of higher lows as well. And you can see volume increased pretty dramatically in the Qs in today's trading. So it does suggest that potentially there's some weakness coming in. Now, I do understand that the chips were selling off today, so that might have had a big effect on it as well. And I noticed that NVIDIA was down as well slightly today in going forward. So looking at breadth in the NASDAQ, we're negative 35 shares at the end of the day. And in the Russell, Russell came right back down and tested this 205 level and bounced off of it. Russell showing a little more strength than the other two indices, but watch 205 in the Russell. If that's broken, it's going to open up a test of 200, and then that would open up a test of about the 187, 186, 187 area. Volume increasing as well in the Russell. And then, of course, looking at where we are in terms of overbought and oversold. We're short-term overbought in the NYSE as of yesterday. Worked that off, basically neutral now, and we're still basically neutral in the NASDAQ. So really not a whole lot is going on in terms of that. Looking at some of the other internals, now I put a couple trend lines up here because I wanted to kind of stress this. So you can see this trend. This is the percentage of stocks above the 50-day moving average and the percentage of stocks above the 200-day moving average. So you can see that what the deterioration that was occurring within the indices as this move higher was going. But even still, you can see that between here and where price was here and where price ended today, it expanded slightly in today's trading, that there is a huge divergence in the 50-day, I should say the percentage of stocks above the 50-day moving average. Those above the 200-day moving average are basically flat. We had a small tick up in today's trading, but we have an area of rotation right through here. So you can see that while price was moving even higher, really didn't get a whole lot of effect out of the stock number of stocks trading above the 200-day moving average. In the NASDAQ, we have basically the same thing. You can see the downtrend in percentage of the 50-day moving average, while price still continued to move higher, and really not a whole lot of gains made even though price continued to move higher. So pretty good divergence. 200-day moving average, really nothing happening there, just another consolidation or rotation as price tried to move higher. And in the Russell, really the same thing, just a decline in percentage above the 50-day moving average while price continued to move higher, and flat basically in the 200-day moving average. Now, what this is telling me is that there are some higher weighted stocks that are carrying the indices higher, and basically that the other stocks that are not higher weighted in the indices are not following along. And at some point in time, that weighs on the higher weighted stocks, and eventually you'll start to see price begin to correct to the internals. We haven't seen that yet, so we have to be aware of it. The trend of price is up. We need to respect that trend, but with caution, because the internals are telling us that this part of the rally is not as strong as we would like it to be, and that potentially there is a greater degree time and price counter trend rotation that is in the offing, at least for right now. That can change. The internals can change to support price. Typically that's around a news event. We had a news event today, and it appeared that was going to have an effect on the internals, but it didn't. And we got the selling that came in, and actually the internals supported the sell-off that we saw in today's trading, as opposed to supporting the rally that opened the market in today's trading. It's going to be an interesting week next week. I'll pick this back up Monday for subscribers. Have a great weekend.